the process of the grind that shapes you and forms you. It's not the game. You think you become a champion on the field? You don't. You become a champion when ain't nobody watching you. You're doing your own drills in your own way. You're doing what coach tell you to do, and you're doing your own stuff. You become a champion in the dark.
What's up, guys? It's Mr. Fit to Flourish, and you heard it from Mr. Eric Thomas himself. You got to prepare and enjoy the process if you want to win. So some of the best people in terms of athletics are people who just love the grind. They love the preparation. They love the process. They're not really worried about the wins. They know the wins is coming because they're putting in the work. Okay, and it's the same when it comes to stocks. So I wanted to share the 7 steps to a successful trade that I've shared before, but I wanted to kind of reiterate this concept. So 7 steps to trade like a pro. So what do the pros do? Like I said, so professional athletes are professionals. What does that mean? It means that they are the best in the world at what they do. Have you ever asked yourself why? Why are they better than the so-called average Joe or Jane? Professionals practice. So Kobe Bryant is arguably one of the best basketball players and athletes of all time. We all know, however, that he was not born with a basketball in his hand, shooting shots in the hospital's pediatric ward, okay? So growing up, he watched what other professionals were doing. And what were they doing? They were practicing, okay? Kobe's coach said that he would find Kobe in the dark 2 hours after practice was supposed to, or 2 hours before practice was supposed to start. What was he doing? He was practicing before practice. So he didn't want to be average. Professionals versus the average. So this is the most important concept that you'll ever learn. So pay attention. So to be the best, you have to beat the best. This means that you have to beat them in the number of repetitions that they do, the quality of the repetition, and the depth of the understanding of the repetition. An amateur practices until they get it right. A professional practices until they can't get it wrong. So when it comes to the stock market, you're going to notice that people who just win all the time, people who you might look as anomalies, Mark Minervini, Dan Zanger, these guys who turn thousands of dollars into millions of dollars. What are they doing? They're practicing. And they're not practicing until they get it right. And they're like, oh, okay, I just got it. Nice. Okay, I'm going to sleep. No. They're practicing until their fingers hurt, until the clicking noise on the mouse is in their sleep while they're sleeping. Okay, until the charts can be read with Braille or something. Okay, so the success formula. You need to practice daily, and this is the exact formula in which to do it. So make sure you follow it to a T, okay, guys? So this may take only 10 minutes a day. But remember, though, if you want to be the best, you got to practice like the best. Ask, what would Kobe do? So here are the 7 steps. So basically, you're going to download a charting platform, okay? I recommend TradingView. And then pick the stock or basket of stocks that you want to follow and trade daily. Now remember, this should just really be like 1 to 3 stocks, okay? Don't go overboard trying to look all across the market looking for stock screeners. Don't do that, okay? Please don't do that. You're going to spread your attention thin and you'll never be consistent. Consistent trading takes looking at a consistent set of stocks and a consistent set of moves and practicing every day. So you're going to pick the stocks or stocks you want to follow daily, and then you're going to first draw lines. You're going to identify special bars, mark the major time periods, mark major reversals, and then mark potential entry points for the trades that you would have taken, and then write up text boxes and rate each entry, okay? So I'm going to walk through that pretty quickly here on how I would do that on just a regular day on SPY. So I do this quite frequently, how I'll go through these trades and I document these trades pretty much every single day. So I have this go to this tab here. So I have this document called Nice Setups where I literally just document this stuff every single day. I'm going through documenting these trades, and in the end, this is what it's going to look like, just marking up the charts, okay? Marking up the charts. So let's get right into it. So I'm going to go into Friday, July 26th, 2024. Here we go. So this is SPY on the 5-minute time frame. So as you can notice, SPY closed at 538.20 or 538.32 on Thursday, and we were selling off from the sky. Okay, so we came out of the sky and we hit this pretty much this low here. Another thing that I like to use the Saudi swing ATRs or Saudi ATR levels. So currently it's on the swing. I want to put it on the daily time frame. Make sure my settings are correct. Perfect. And one thing you'll notice is we're above this blue zone. That blue zone is the call zone. So it means that if we get above that today, we're likely to have longs be pretty good. Longs will be pretty good. There's a lot of buying in the market. That means that the volatility will be more to the upside on SPY today. So I'm just going to hide that. I like to see that. And I also like to see the 100% move, but that's fine. So in terms of what we're trying to do today, the first thing that we're going to do, okay, the first thing that we're going to do is we are going to mark lines. Okay, so we're going to draw lines here. So you might want to just draw some trend lines and then look for trend line breaks. Drawing lines, so I draw trend lines there. Another thing that you might notice is that we created a double bottom here. Double bottoms don't have to be exact. Okay, so double bottom here. Whenever you have a double bottom or a double top, there's probably going to be a neckline, which means from the first bottom, there's going to be a move up. And then from that move up, we're going to get a high that we couldn't surpass. And we're going to come back down. So there, from that move up, it sends us somewhere. Where does it send us? Well, it looked like it sent us right here along this line at 543.72. Okay, so we have a double bottom. We put in a neckline. We came back down. So this was our low. We got sent up, came back down at this level that we could not surpass, and came down. If you look to the left, what is there? Massive wick from before. All right. So drawing lines, and then also what I like to draw lines are on our micro double tops. A micro double top is pretty much when you close next to the bar that opens, so they're adjacent to each other. Okay, adjacent to each other. And then micro double bottoms. So micro double bottoms, and micro double tops are signs of immediate reversals. And then also overexhausted bars are signs of immediate reversals as well. I also noticed another micro double top right there. This is a micro double bottom here that sent us up. What else? And then more micro double tops, micro double bottoms. And this is also known as an up and then down bar, up down bars. And then you have micro double bottoms, which are down up bars. All right, so we drew our lines. So what's next? Then I like to first mark our major times. And the two major times are going to be the 10 a.m. reversal time, which would be right here. So I'm going to go here. Boom, boom. And then 11 a.m. Eastern Standard Time. So it's going to be right here. So I like to mark those two times. Typically, you'll get a reversal right at those times. And we did. We got, just a small, well, not a small, this was a pretty massive retracement to the downside. And then we pushed back up and then got a huge retracement there. Here at 11 a.m., we got right back to that same level and reversed to the downside again. But we put in higher lows, okay? Put in higher lows. And we're still above our MAs. We also got the 20 MA crossing above the 50. That's pretty significant. All right. Awesome possum. So we drew our lines. We marked major times. Now we need to mark major reversals. Okay. What are our major reversals? So it looks like the first major reversal to me kind of looks like it was this guy here. Okay. We had a massive move to the downside before we just started this uptrend. We rocket shipped to the upside. Okay. And then the next major reversal looked like this guy here. Like a sloth that doesn't want to fall out of a tree, but he fell. Okay. So that's going to be our next major reversal to the downside. So major reversal number 2 major reversal number 1. Okay. Now, what is the next part of our practicing and documenting? Now, remember, this is what you're going to do every night after the market closes. This is how you're going to recognize patterns after doing this every single day. And then, like a lot of people on my TikTok, they ask me, hey, how are you predicting this stuff? Like, the stuff you predict literally happens every day, and I make a watch list every day. Well, the stuff I predict is because I've been charting every single day for the last year and 8 months. I make sure that I don't miss any days, even if I'm out with the friends. I'm on my chart at the bar, or when I was in Aruba with family, I was out at the restaurant, out at the bar, making sure that I'm charting on, at least on my phone. Okay, and then even at night when I'm coming back from whatever, I'll make sure I at least get 30 to 45 minutes on the charts before I go to sleep. Okay. And I'm recognizing patterns and price action. So the next step, again, so we drew lines. Okay. We marked the major times. We marked major reversals. Now the next step is going to be to mark major bars. So this is going to help you in terms of identifying trend and non-trend bars. Okay. So major bar right here. So that's an overexhausted bar. We also have another big trend bar right here. This is a special bar. So marking special bars doesn't just have to be the trend bars. It could be things like this. This is a massive topside wick. So this has good implications for selling. Okay, so selling up there. This is a huge bar, but I'm going to kind of leave that alone. And then we also had this massive push to the upside here. We held pretty much right at the 50% mark of that bar. And then we have another pretty big bar here, trend bar. Okay. And then we get these huge bars here. Jeez Louise. These are huge trend bars sending us down. Okay. And then massive bottom side wick right here. Jeez. And then huge bars. These are pretty much all pretty big bars here at the end of the day. All right. So yeah, we marked all our special bars. This also looks like not only a micro, but also just the bottom there. All right, perfect. So we marked all our special bars. Now, after we did that, what do we do next? Okay, we drew lines, we identified our special bars, we marked the major times, major reversals. Now we're going to mark potential entries for trades. But before I do the potential entries, I like to just kind of write up my text first. So let me take notes. So time to take notes. So I would do something like this, where the first thing I look at is, I go in order, chronological order. So the first thing I look at is here. So I see a major gap up from previous day. And then I'll like actually write notes of stuff. So like big gap openings equals sign of strong trend. All right, what else did I notice? Pretty early on, we got a 9 MA cross above 20 MA, which is significant for longs. And I'll take my arrows and I'll point. I like to point a lot at things that I need to pay attention to, that I do pay attention to on a day-to-day basis. And then another thing that I like to note too is areas like this here. We can also put a rectangle around that area, or not a rectangle. Let's do a ellipse around this area here. And why are we doing an ellipse there? This is what I call Wick City. So if you remember the movie John Wick, if you remember the movie John Wick, so John Wick, they called him what do you call him? Like the babushka or whatever. In the Russian mob, like he's what you're scared of. This is what you should be scared of in trading, okay? You see a lot of bottom side wicks, top side wicks, bottom side wicks, top side wicks, top side wicks, top side wicks, bottom side wicks. When you see back-to-back wicks like this, think of John Wick and be scared. This is Wick City, okay? Wick City is something you should stay away from. It's gonna kill you. It's gonna, like your option contracts, they're gonna get killed. Okay, you're not gonna be able to pick a direction. John Wick is coming for you. Okay, so whenever I see wicks like this, I know that price action is gonna go sideways for a good while. So when I see this, I'm like, all right, let me put my timer on. All right, 30 minutes. Let me give this 30 minutes to hash out a direction. Okay, and it looks like that's what we did. We had a massive sell-off here. So massive sell-off over exhausted bar, and what kind of bar? Bear bar, and that is this guy here. And then what is this? This is massive topside wick. Again, topside wicks means that there's sellers in the area. Bottom side wicks means there's buyers stepping in. Okay, so massive topside wick, and then just a ton of resistance here. This is major resistance. Major resistance. And notice how we're flat here, but we're increasing in terms of price action. We're getting higher lows, but when we're keeping this high, we're respecting this resistance level and putting in higher lows. So what is that called? This, my friend, is a pattern that you need to know, and this is an ascending triangle. Ascending triangle. All right, and then the move that sent us up. So this is the move that sent us above these highs. So we broke out of range here. This is our breakout. Breakout from ascending triangle, bullish trend bar, bouncing off 20 MA, which is my yellow line. The 9 MA is my pink line. The light blue line is the 100 MA. And here we got 9 MA crossing above 100 MA. And then we got a sharp move to the upside after breaking out of this range. Now, where can you set your target? Well, how do I like to? I like to set my targets based on previous highs. Okay, previous highs. So the previous high here, which would also just be pretty much just like the sell side order block. Okay, so the sell side order block looks something like that, and look at that. That's right where we went to. So you can pretty much set your target there. You can have other targets if you'd like. You can have a target at this move down, this buy side order block here from this this move up. This is a pullback, and then you can also have it at this wick. So your first target would probably be to this wick where we have a sell order, and then potentially that pullback. And look at that, right at that pullback is where we had a pullback here, and then a move to that top sell side order block, which is where we rejected previously off of the 200 MA on the 5-minute time frame. But yeah, we pretty much formed a perfect V. Another thing I kind of noticed though, was that this was kind of like a head and shoulders pattern. So if we hide all those drawings, this is kind of like an inverse head and shoulders. And then our neckline was right at that resistance level. So if I was going to draw that, it would look something like this. Neckline was here, shoulder, head, shoulder, neckline. So right there, inverse head and shoulders, right? And then that move, that break above the neckline, sent us up. So I would also take note of that. Inverse head and shoulders. Neckline break. So right now we have a ton of notes, okay? And it seems like we didn't really write that much, but we have a ton of notes. And you can kind of just delete these drawings as you're going. I like to take a screenshot of it and then save it in my nice folder set up here. So I take screenshots and then I'll just save it in my folder, so then I can always go back and look at my notes if need be. Okay. So yeah, we made that move to the to the top side. We ended up facing a ton of resistance here at this previous high. So what did we have? We had a ton of sell orders coming in. We also had what is called a bearish engulfing bar. Bearish engulfing bar. What else is there? We see a micro double top where the sloth is. Slippery sloth. We also have 9MA crossing below the 20, so the pink line crossing below the yellow. That is occurring here. And then we had a mean reversion. So we sold off pretty far from the 20MA. We found support on the 100 and then moved back up to the 20 and rejected back to the downside. Okay, good stuff right there. So now I would probably mark my potential entries. So based on my rules and how I trade, what would be a potential entry? Well, you already know I'm not trading in here because this is Wick City, okay? I'm staying away from John Wick at all costs. Now, one strategy that I do like to use, I like to use breakout strategies. We have the 9MA cross above the 20 here, but we don't have a super strong signal on that move up. We have topside wicks, bottom side wicks, topside wicks, Wick City, okay? And then here, this would probably, I'm not going to lie, this is probably where I would enter when I first started trading. I'd probably enter here, but we didn't take out the previous high, which we were having trouble taking out before. And now that I understand that this is a double bottom, and this I know is the neckline that we need to break in order to have a continuation move to the upside, or else we're just going to keep going up and down and up and down. So now I understand, hey, we have a double bottom here. I forgot to write that down actually. Double bottom. And if you have a double bottom or a double top, that means you have a neckline. So we have a neckline here. We have an ascending triangle here. And then we're breaking out there. So the best take, okay, the best take would not be, it would kind of be this bar here, but really it's after your confirmation. So we had a big bull bar here, but it literally tapped the top line. It didn't have a nice pronounced break above. We had a retest here and we smacked the 9, and then we got what's called a slingshot doji or a hammer doji where buyers stepped in. So I think the best take would honestly be here, the break above this range, a break of the neckline, right after a nice bull bar, a retest, and a move up. And then we also had the 9MA crossing the 100 here. The 9MA was already above the 20 cross above the 50. So our MAs are uninverting here. Then we pushed to the upside. We had a nice pronounced push to the upside. And then again, we're testing highs. So that would be my one entry that I would look for right here. Again, this is jumbled up. I would wait 30 minutes and be like, hey, what's happening? And then like here, I'd be like, ah, nothing's happening. And then I would see that we put in a double bottom. Put in a double bottom. Now we have a neckline. We need to break that neckline. You can also zoom out and see that we have an inverse head and shoulders. But yeah, first take, boom, we broke above that range there. Good stuff. The next time I would be looking for a take is here. So we're in this top side sell side order block. We create a micro double bottom or a micro double top. Micro double tops are instant signs of a reversal. We then get a massive push to the downside, and we're in this sell side order block. So if you would like, this honestly would be the next best take of all time, and I would do a 0 DTE here. I'm not going to cap, because we have really good risk to reward. We know our risk is going to be to that high. Okay, if we break above that high and close above that high, we're probably going to continue. Oh, whoops, I drew this wrong. Let me undo that. We're probably going to continue. Okay, so I would take my entry there, set my stop as a close above that high, and then what would your target be? Well, your target would probably be back to the low, right? Target would probably be back to that low, which would give us a 3.26 risk to reward. We actually ended up coming back into this area of consolidation, right at where the move sent us up. So that was more of the actual RR was 2, which is good, which is still good. Okay, still good stuff. But that would be the two best takes that I see on the day. Not only is that a bearish engulfing, we're crossing below the 9 MA. We're also taking out this this previous low that we put in, which is a break of structure. Okay, so I can also write that there, BOS, break of structure, boom. And then I would go ahead and I would grade the trades. And how would I grade the trades? I would grade them based on confluence. So overall, the market has recently been in a downtrend. Okay, but the overall trend is really, we're still in this this bullish market. We're still in this uptrend. So following the overall trend already yields you a higher grade. So we're already at like a C plus. We have a pretty weak break here. Like I said, it was a pretty weak break. We could have ended up selling off right at the neckline. And then we have another pretty weak signal bar, but we did break above the neckline, and we have a pretty good risk to reward. What would my risk be? My risk would be to pretty much the low of the bar that sent us up. So if we take out this low right here and close below this low, I'm out of this play. But if we hold, then we're cooking. We're cooking, and we're going to test the previous highs. Okay. So in terms of this play right here, for me, this would be a B minus. Okay, B minus with the overall trend. Weak signal bars though. We do have MAs uninverting. Our 200 MA is still above, so it shows you our MAs are still inverted, but they're uninverting here after a massive sell-off. We're at lows. We have a inverse head and shoulders. We do have a ascending triangle formation. So a lot of things showing us that we're going to get a good move to the upside. And then we also on Friday, we had pretty decent core PCE. Okay, so all of those factors factor into a B minus play. B minus play. Now this play here, so this would be more like a C plus play here. So we're going against the overall trend. We're taking a reversal, so already that puts us like close to a C. We're at highs though. We're at highs. We have pretty decent risk. It's based on what we ended up at. It was really just a 2 to 1 ratio. But if we set our target to the low of day, it'd be a 3 to 1 ratio. We had a break of structure here, bearish engulfing bar, micro double top. A lot of signs showing that we're moving to the downside. We also had a cross below the 9 MA. Okay, and then we're also in this sell side order block. So just a lot of signs showing that we're moving to the top side or to the bottom side. Nice bearish bar, bearish engulfing candle there towards the end of the day. Good C plus play right there. All right, so that is pretty much all I had in terms of this video for today. It was a pretty long video, but very detailed on how to document and what I'm looking for in terms of trades. So this was everything that I look for and how I grade the trades every single day. I do this every single day. As you can see, this video is like 30 minutes, so it takes like 30 minutes to do this. If you do it every day, you're going to start noticing patterns, and you'll be able to predict and make watch lists on TikTok like I do. So I hope you guys enjoyed that. Y'all have a great day. Good morning, welcome to the Fit to Flourish podcast. Let's talk wellness, finance, and growth.